Hi, if you have an overseas capital gain, then please watch this video. Hi, this is Gagan from 121 Accountants. My mission is to empower individuals and businesses with knowledge and service to help them achieve their financial goals. Today, we'll talk about overseas capital gain. In this video, we'll cover the following topics. First, what is capital gain? Second, examples of overseas capital gain. Capital gain allowances, remittance of gains, capital gains computation, capital gain losses. These are topics we will discuss. So what is capital gain? If you dispose of any asset outside the UK or within the UK and you made a gain on that, that gain is subject to a capital gain tax rather than an income tax. So that gain, when it's subject to a tax, is called a capital gain tax. So you made a capital gain or gain on any investments on assets is called a capital gain. Generally, capital gain arises when you dispose of residential property, or when you dispose of commercial property, or when you dispose of stock and shares. For example, you bought a share 10 years ago and you're selling it now, the value has gone up. The gain on that share is subject to a tax, is called a capital gain tax. Shareholding any business, you are a shareholder of any limited company either in UK or overseas. If you're disposing of that shares or you're disposing of that business, then that's classed as a capital gain. Compulsory purchase order. That means, let's say you have a land overseas and government has issued an order to compulsory acquire that land. Either they want to put a railway line, or they want to put a road, or they want to put a airport or any other for use if they acquire your land or property compulsory. That's called a compulsory purchase order. So when whatever gain you are getting on that compulsory purchase order, that's called capital gain. Mutual funds. Mutual funds generally are treated as income rather than gain, but please watch my other video on overseas mutual fund, which I have done a detailed video, which you will understand how those are treated. Examples of capital gain. So let me give an example for a capital gain. So let's say you bought a property in Mumbai in year 2000 for 50 lakh rupees, and you sold this property in January 2023 for, let's say, 1 crore rupees. So a gain of 50 lakh on that property is subject to capital gain tax. So you will pay the tax in India on that gain, plus that gain has to be reported in UK, and then corresponding tax will be paid in UK as well. But obviously you'll get advantage of double taxation relief. Now let's talk about capital gain annual allowance. So every individual in the UK have a capital gain annual allowance like a personal allowances. So if you made a gain in a tax year for 22-23 up to 12,300, there's no tax to pay. So you make a gain in UK or you make a gain overseas, any capital gain up to 12,300 is exempt, so you don't need to pay tax on that. Secondly, this exemption amount is changing from next year, so which is April 23 to 24 tax year. This amount will reduce from 12,300 to 6,000 pound, and in the following year 24-25 this amount will reduce from 6,000 to 3,000. So this allowance is reducing. So if you want to make a disposal, do it before 31st of March, so you can take advantage of 12,300 pound. Next, we'll talk about remittance of gains to UK. Generally people ask, oh, if I've made a disposal outside UK, but if I'm not bringing the money in UK, then why I should declare and pay the tax? It doesn't work like that. There are two types of taxation. One is arising basis. In arising basis, if you're a UK resident, any gain arising worldwide or any income arising worldwide has to be reported into the UK taxation system, and you need to pay tax on that as well. That's called arising basis. Either you're bringing the funds or not is irrelevant. If the income has arisen or gain has arisen outside UK within the tax year, you need to report that into UK. Another is remittance basis. So remittance basis is basically means that if you will only pay tax in UK if you are remitting that money or you're bringing that money into the UK. So that's called remittance basis. Generally, the remittance basis is only applicable if you are non-domicile. So it's only applicable to non-domicile. Non-domicile means if your permanent home is outside the UK, that means non-domicile. But again, you can take advantage of remittance basis if you're non-domicile only. But a remittance basis has its own complication, is a very complex area of taxation. So please take advice in detail. Do you qualify for remittance basis or not? And there are other advantages and disadvantages of losing personal allowances and annual capital gain allowances while choosing a remittance basis. So that need to be considered as well. Let's talk about computation. So you made a disposal overseas. Now how that disposal is computed in UK, so you can pay a correct amount of tax in UK. First, that gain will be subject to a UK tax law. So UK capital gain tax law will be applicable on that gain. Secondly, if the country where your asset is situated has a double taxation agreement with UK, then you will get a relief as per the DTA, double taxation agreement. And if you got any reliefs in the country where the asset was situated and you dispose of, that relief may or may not be available into the UK as per the UK law or as per the double taxation agreement. But if your asset is situated in a country where there is no double taxation agreement with UK, then unilateral agreement rules will apply. Thirdly, generally if you dispose a residential property in UK, you have to report that and pay the tax on that within 60 days. But if you are disposing a residential property outside UK, that 60-day period is not applicable to you. So you don't need to report within 60 days, but you still need to report within the tax year in the tax return when you have sold the property. So that 60 days exemption is not there, but still that need to be reported into your tax return in the year you have sold. Let's talk about capital gain losses. So you made a disposal and you made a loss. So yes, loss relief is available on the losses you made on the disposal of asset overseas. Overseas losses made while you are non-resident into the UK will not be adjusted against the gain when you are in UK. So for example, you made a disposal while you were away from UK or you were not resident in UK and you made a loss. And next year you become a resident in UK and then you again dispose some other asset in that year overseas and you made a gain on that. But the overseas losses last year while you were non-resident cannot be adjusted against the overseas gain in the next year. And losses offset. So what that means is that overseas losses can only be adjusted against an overseas gain. It cannot be adjusted against a UK gain. So I hope you understand what overseas capital gain tax is. So basically in a nutshell, I've made an effort to explain that in this video, that any overseas gain you made outside UK, that still need to be reported and taxable in UK. So please disclose that into your tax return without fail. Otherwise HMRC might send you a nudge letter saying that you have an overseas gain which you have failed to report. Thank you for watching this video. Please do like, share and subscribe my YouTube channel. Thank you for watching.